The crypto war continues with the whole ETF and Gary Gensler, and it could be game over for Gary Gensler as he gets absolutely grilled by US congressmen. So that is one of the things we're going to cover on today's show. If you have a look over here, we'll go through some of the clips of how he got absolutely annihilated in court. We'll cover the S&P 500 year-to-date returns and how it has come back into parity with where it has been previously. We'll cover the current Bitcoin cycle and where we are year to date in comparison to the previous cycle lows to tops. And then we'll also cover how spot sellers are yet to come back into the market. And without further ado, let's get straight into the show. I thought we'll start off over here with the banter bubbles. And then more importantly, I want you guys to go through into the poll section and let me know, do you think that a Bitcoin ETF approval will occur with Gary Gensler as the SEC chairman, or do you think that he'll get taken out of the position and only after that an ETF approval will take place? So make sure you go and vote. So far we have the majority of you thinking that there's no way an ETF approval will happen under the reign of Gary Gensler. So let's have a look at a couple of these videos while you vote over there. You can see the way he got absolutely smashed in court. This was by Mr. McHenry, if you have a look over here.
Serious questions to answer to the public and to Congress, and we intend to get your compliance. We can do it the easy way or the hard way. And with that, I yield back. The ranking member is now recognized for 5 minutes. You've got serious.
So he says that you can do it the easy way or the hard way, and then you also have
markets. Serious questions to answer.
Let's just quickly pause that. There you go.
The SEC version.
You can have a look over here in this one as well. Somebody put in a Coinbase. If you have a look at the top there on the phone, similar to, remember you had the guy that hold the buy Bitcoin sign. You have the same thing over there. So stand with Coinbase, pretty interesting. And then again, getting grilled over here. Which Gary Gensler do we believe? Do we believe the academic one from the past, or do we believe the current Gary Gensler who's completely against crypto?
I'm confused. At which Gary Gensler, the American public, should believe? The academic version, who spoke glowingly about the power of technology to help more investors participate in U.S. and global capital markets, or the SEC version, who apparently thinks all use of any technology by broker-dealers and investment advisors is inherently conflicted, and firms should just stop using technology altogether. Chair Gensler, could you please briefly explain this change in your views?
So there you have it again, getting grilled by absolutely everybody. So in today's show, we're going to discuss how this all lines up, all these macro events, lines up with the Bitcoin halving cycle and price-wise, what you could be looking at going into April, May of next year. It's very interesting the way everything lines up with the ETF approval dates being constantly delayed and the final delay date coming in right around that halving event. So let's have a look at one or two more of you. He says, I'm convinced you're not an impartial regulator. Instead, it's clear that you're working to consolidate your own power, even though it means crushing opportunities for everyday Americans. In this video over here, he goes into detail, giving a scenario to Gary Gensler with regards to whether buying Pokemon cards would be considered a security. And Gary Gensler's answer to that question was no, definitely not. And then he says, but if those cards were held on a digital exchange, well, then is that a security? And pretty much he said yes to that. So absolute clown world over there that we have. You can go through to Bankless Twitter page over there if you want to look through some of the videos. And they did essentially threaten that they would subpoena him if he continues to withhold information. They've been waiting for court filing documents for 7 months now. And there is a potential that legal action will be taken if he doesn't come to the party and cooperate properly. So anyway, moving on, if we line that up with the S&P 500 year to date, we know that there's been a little bit of a divergence in the sense that Bitcoin has actually been holding up whilst the stock market continues to sell off, and the dollar, the DXY, continues to rip to unprecedented heights. So we'll cover where that might find a bit of resistance, and then there could be some relief for the S&P 500. If you look at this chart over here, it's from Benjamin Cowan. He says so far this correction by the S&P 500 has just brought the index to where it would normally be in a pre-election year. At this point, you could see a lot of chop going into Q4, but ultimately it's been brought back into parity. So that is at least one good sign. If you look at Bitcoin's market cycle returns, basing that if the 15.5 was the ultimate bottom of the market cycle, we would currently be on the purple line over there, which is pretty much underperforming compared to the previous cycles. So that might mean that Bitcoin is actually undervalued in the whole light of this SEC case, which is currently going on against the Bitcoin ETF. It could be bringing a bit of pessimism into the market. Also, a lot of recessionary talks, and that could mean actually for a major opportunity. And if I pull these cycle things away, you can see over here, very flat compared to the previous cycles that we've had for Bitcoin. So bear in mind that most of the time the price starts getting moving right around that halving cycle, which is coming up. But first and foremost, we need to see these spot traders start to bid price action. For the time being, if we focus on the white line over here, you can see the predominant market cycle as of late, as of the last couple of months, has been completely driven by leverage traders. Anytime that we get small spikes up, you can see it's because of spikes in the leverage traders pushing price up. Spot continues to just slowly drip down and completely sell off, which means that if spot buys do start to jump back into the market over here in a low liquidity environment, you should see price rapidly driving up again and moving towards the upside. Lining that up over here with Bespoke, he says there's something about late September. Every major US index ETF in their trend analyzer is now in the extreme oversold territory. The last time every single US index ETF in their trend analyzer was extremely in the oversold territory was a year ago, which was on the 27th of September 2022. And if you line that up, you know there was a major bounce out of that zone, leading to quite a melt up. So some very key levels that are lining up. I'm going to show you the price chart and what that means in just a moment. But lining up with the fear and greed for the stock market, officially, it's just entered into that extreme fear, and that's based off of the recent pullback that we've had. So I'll get into the S&P 500 in just a moment. I just wanted to give you some very valuable advice from Angelo BTC. Angelo BTC was one of the top traders, a whale trader, all the way back in 2017. Used to top the main exchange, which is the BitMEX exchange. He was in the top 10 over there for the majority of the year, and he gives some valuable advice over here. So I think this is useful for you guys who may be waiting for way lower prices. So hear me out. I have a similar story, something that happened to me back in 2020 in the COVID dip. To make a very long story short, I went all in on Bitcoin at about $4,400, and then I got greedy, looking to exponentially increase my position size by targeting a CME gap on Bitcoin, getting very technical for additional gains, maybe like an extra 20-30% gain by buying at 3,525. Now that CME gap never got filled. I played a bounce from 4,400 up to about 5,500-ish, made good profits, sold into resistance, and then looked to target that CME gap. And the stimulus came out, and ultimately price just ripped through those levels, and I ended up having to chase price, buying back much higher and losing an enormous amount of opportunity. So I think this is a great lesson over here from Angelo BTC, who explains a very similar story. He says, in February 2017, a prominent bull figure in the BitMEX troll box called for $10,000 Bitcoin by the end of year. The price of Bitcoin at that time was $1,000, and Bitcoin was on the verge of breaking all-time highs. However, this person believed that the market had to correct first. He decided that he was going to first short, bear in mind, from $1,000 per Bitcoin, short it down to $800 before flipping long, and then longing up to, I guess, $10,000. He says here, Sledger, a BitMEX whale, dissected this person's logic, and he stated this. He said, you're going to risk an opportunity cost of $9,000 per coin to make 20% extra, right? Because he's gonna short from 1,000 down to 800 as a 20% gain and then flip long. So he's trying to play 20% extra for a difference of a $9,000 per coin gain. This person was then liquidated at $1,300, shorting, right? He was shorting. Price moved up to $1,300, and 30 days later, Bitcoin hit 20,000. 30 days later, and then Bitcoin hit $20,000. 10 months after that, and he was never heard from ever again. So he says it very well. Yeah, this is why you have to split your portfolios up. You have to have your investment portfolio, your long-term hodl portfolio, which you are willing to go through the ebbs and flows of the market cycle and experience drawdown, but you're going to be holding those spot positions maybe on a ledger for quite a long period of time. And then you have to have your swing trading account, and then you have to have your day trading account, which predominantly on this show, we operate as a range trading system, right? If we're doing day trading. So he says here, if you're investing in in an asset with a long-term target, stick to it. It happens or it doesn't. Be careful adding more variables, thinking that you can time the market in between. A large majority of us are guilty of this mistake. And then he says, him included, let this person's sacrifice be a lesson. I think it's a great lesson. I really wanted to bring that to your attention at this point in the market cycle, because Bitcoin has been consolidating now at these higher prices since the ultimate lows that we had from the FTX collapse or forced liquidations at 15.5. We've spent, I think, almost already a year above those levels. And ultimately, you don't want to be in this situation where you're constantly looking to short down to new lows and price eventually expands, because we've had a long consolidation period, right? If you look at Bitcoin over here on the 3-month time frame, we've now had within this region. So if you take this orange line over here between 24.7 and the top side about 31.5, this is essentially 3 months that we consolidated the close at the top here, another 3 months, and now another 3 months. That's 9 months that we've essentially spent above $24,756. That's almost a full year, guys. So that is a long period of time. The expansion phase from this will be quite an enormous move. And so far, bears are running out of time. I'm going to say it as it is. Bears are running out of time. They needed to strike last week. Now the bull's in the bull's court. We'll see if the bulls can strike, but we know that the quarterly close as well as the monthly close is going to be absolutely critical in determining what comes next. We'll start to get those new prints on the momentum oscillators on a high time frame, and that should give us a lot of new information. Ultimately, your next expansive phase will take place when one of these highs or lows are taken out on the previous quarterly high and low. So 31,458 on the top side and 24,756 on the downside. Those are the levels to watch for. And if you line that up with the monthly, yes, pressure is still down because price is capped below all those key moving averages, the 7, the 20, and the 50. Price needs to get back above that level, but bears are starting to run out of time to take their chance to send price into these lower targets, and most notably 23,000 all the way down to 20,500 in between that area. And even if that does happen, the question is it really worth max shorting your entire account trying to get it to these levels, when in fact this could just end up being another macro higher low? So you have the major lows, next macro higher low, and those should more be viewed as opportunities to get an entry into the market, in my opinion. So watch that carefully, because if you line that up over here with the total crypto market cap with the various trend lines over here, you can see anytime that we come into the bottom side of this logarithmic growth curve, that is essentially the accumulation phase, right? Look at the timing aspect between there and there. It's pretty much a very similar amount of time spent in those low bands, and I can zoom into that level. You could potentially get a little bit low, but at this point in the market cycle, I don't know if it's worth looking to take these max swing shorts into new market lows. Remember, we do have the BNB short, which is still currently on the table as a hedge. I can bring that up towards the end of the stream. By the way, start prepping which coins you want charted. I'm going to be taking chart requests. You can already, in the next 1 minute, start your time in the next 1 minute, start dropping those charts in, and James will tally up what the most requested ones are, and we'll bring that up. So essentially, if you look over here, you got the fair value line is the red line over here. That is essentially where you would expect the market cap to be for the entire crypto market cap to be considered normal, right? Fair value. We are nearing the lower band, right? Here is the lower band. You can see we are in the undervalued territory if you have a long-term time perspective. So that's lining up with what I showed you from that Angelo BTC. Have a high time frame perspective on those spot trades. And the hope is still alive for bulls so long as the stochastic RSI continues to trend towards the upside and these ultimate lows get defended. Remember, once we start to cross above the 20 mark on the stochastic RSI over here, denoted by the green dash line, that is where the move really starts to get going. Once you start to get above there, momentum should start to really shift in the bull's favor, and then you can start to play that range back towards the top side over here around that $30,000 mark. Get above that and you have a potential major breakout, and you'd be looking for new highs. Morning, Fred. Guys, Fred's docs now, by the way, so we can actually turn the camera and show all the weird things that he does at the windows here in the morning. Okay, moving on over here. Remember, we do have the Bitget futures trading competition coming up. I have limited spaces available. We're going to cut this very, very soon. But if you do want to jump in and join my team, it's Whale Trades. Click the link in the description below. Type in Whale Trades and it will take you through here. Click join team, jump in. It's going to be a phenomenal competition, which is going to be beginning right now in October. And October historically is a pretty good volatile month for crypto. I think that this boring phase should end. I do want to remind you, I'm not a fractal fan, but just as a general reminder, how similar the price action is over here. Look at the price action in that region, and then look at the price action right now. Okay, very, very similar. We have similar market sentiment as well as what we had back here in December leading into January. Very, very dull market. The difference is now there is more opportunity for bulls than there was down here. Why do I say that? Well, simply because the trend has been up. Yes, we've come into a dull consolidative phase, but it's following an uptrend. The difference over here was that we're coming off of a very strong downtrend, and then we started to consolidate at those lows. Now, that's a lot harder for bulls to reverse a market like that. When you have a big expansive candle here, you're consolidating at the lows. Generally, you need to stick in line with the trend, right? Which would be towards the downside. Based off this low volume, we had backwardation within the market. And on this show live, you can literally go back towards that date. Let's mark off the date. Feel free, literally go look back what I said between the 25th and the 25th of December and around the 3rd of January. I remember very clearly we started to see signs of deviating back into the range, and we flipped long over here, big expansive candles towards the upside. Now, the similar price action is taking place after an uptrending move, consolidating and defending a key horizontal level for a long period of time. What is the key horizontal? Well, you can see from the wick over here, you can mark that level off. Let's make it nice and big. This has been historically a very key level. Support, resistance, resistance, support, 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 support. Continuing to hold. We have Gaussian channel, middle band of the Gaussian channel coming in as additional support over there and continuing to hold. So as long as price continues to hold above 25,300, you have to give the edge to the bulls. You have to give slight edge to the bulls. If that helps, if you appreciate that analysis, take 1 second out of your day to smash a like button. All of you smash the like button, hit the bell notification and subscribe to the channel. And then I can see a lot of the chart requests there. EGLD is one of them. We have Luna. Someone's requesting Luna. I saw Luna was pumping as well. So make sure we have Chainlink. Chainlink's been hot as well. Solana. Ben. Someone wants Ben coin. XRP. Okay. Put your coins in there. Okay, James has summarized them as Solana, Render, ADA, dot, EGLD. So keep those up. James, you can bring it up again. See if there's more that comes up. We'll do those requests towards the end there. Okay, RENKO is still holding green over here, and RENKO is a very simple chart to trade. It's very, very easy. Once it's green, you want to be long. Once it's red, you want to be out the market or shorting. I wouldn't want to be shorting now because the majority of the downward moves have probably played out. This is where you want it to be shorting from extreme greed all the way down, relief rally, short the second leg down. Will we get a third leg? Well, it is a possibility, but at this point, we want probability on our side, and the safer bet would be to just stay in cash when it's red and then to look to go long when it's green. So the next push up into this 30K level could be the opportunity to break out. We also identified on RENKO, you would have a W formation, which would be forming over here, and a break above this neckline over here should take that W formation up to $36,000. That lines up with the weekly stochastic RSI, which is currently trending towards the upside. But first, we really need to see dollar weakness. You can see the dollar is currently on a TD sequential 8 count. Usually, it will call for a top on a 9. It works in counts of 9. So 1 to 9, if you have 9 green candles in a row with each close higher than the previous high, which you've seen over here, that's what creates the 9 count, right? 1, 2, 3, 4, 5, 6, 7, 8. Every close has been higher than the previous one. You'd be looking for a top somewhere around the 9th candle, which means one more week of upside on the DXY. Once we start to see a major pullback from there, that will give Bitcoin a chance to break through those clear levels of resistance. But the DXY is looking pretty bullish long term. You have to call a spade a spade. The DXY is probably going to go to even higher prices despite whatever happens on the 9 count. If it pulls back from there, it's most likely going to be a higher low, and then you can expect continuation to higher prices throughout the rest of the year. But a very important thing to understand is just because the dollar continues to rise towards new heights does not actually mean that Bitcoin has to continue into a bear market. If you look and compare to what happened in 2017, one of the most mammoth Bitcoin runs that we've ever seen, the DXY was rallying at the same time as Bitcoin. So don't let that deter you from looking for positions, right? You need to, it's all got a time and a place. You just need to understand how to work it. Okay, looking at the S&P 500, you can see we have a potential reversal candle right over here. We looked for a move into the unfilled gap as a potential level to hold as support and likely lead to a bounce. If that level failed, well, then we said our next very major support is going to be the 200-day moving average, which lines up with strong horizontal support for pretty much a long period of time. Now, remember that chart that I just showed you? They said that the last time was 365 days ago. There we go, 365. Let's go back to a year ago. So it was round about here. It was on this sell-off over here. This was the last time that Bitcoin, or at least that the markets had such oversold levels. So now look at how much higher prices, right? Now you can divide these two levels up simply like this. You can just say, well, that's your range. Here you got your range low. Here you got your range high. This is going to be your discount zone. This is going to be your premium zone, and this is essentially also the sign of strength, right? If the S&P 500 continues to consolidate above this 4,200 mark, which is the major support, then this is your sign of strength where bulls are in control. So although we call this a discount zone where you're potentially looking to buy, and this the premium zone where you're looking to sell, you also have to understand that when price consolidates in a premium zone, ultimately, that shows that bulls are the ones that have the advantage and strength within the market. When prices in the discount zone, that means that bears are in control of the market. So who's in control right now? Well, ultimately, as long as we're above the support zone, bulls remain in control within this zone, and therefore it's opportunities to look to buy the dip. Okay. Apple, a lot of people have been super fearful of Apple as well being one of the top 7 stocks, which is driving the stock market to new heights. You can see over here that this is still a very clear and steady uptrend, right? You have higher highs and higher lows. You had a little bit of a scare over here where it looked like it was rolling over. That was leading into January, and then a face ripper towards the upside. This is now on a weekly time frame. Apple's currently pulling back, and we're looking for support right around here at the 0.382, which is the Fib retracement level. If it is a bullish move, well, you would expect price to bounce over here. If you lose that level, well, then the next zone that we're going to be looking to is potentially the 618, that golden ratio as a strong reversal point coming in at 152, which is for the Apple price, and that should be your next higher low. So keep an eye out on that. I also found this interesting. I looked at target price just randomly the other day. This is down 59% since target went woke, right? Remember, they went woke and there was all those things going on. They say go woke or go broke, and ultimately 59%, and it looks like the downtrend is continuing. So target probably finds some support over here at about $84 for target. Okay, moving on to Bitcoin. Now, this is what bears are going to be looking for. If you're a bear, you're probably hoping for something like this. You can see the rejection. We had the death cross between the 50 and 200 MA on the daily time frame. We have rejection 1, rejection 2, and now we just got our third rejection. So a lot of stops will be placed above here. Bear in mind, these guys will be riding their stops down. So ever since the highs over here, this means a buildup of liquidity. So remember, a lot of people shorted over here. They would then move their shorts down to the above this level once price came down, and then below that level, and now you can see price is moving up. So if they get the fulfillment of their move, they're going to be looking to target this $24,000 region, which is a new swing low. Now, that is a real possibility. If price continues down here, you have a new invalidation as well. I'm going to update you on that new invalidation. But if price continues to reject down here and gets below this low from the 24th of September, which is below 25,986, well, then there's a real possibility that this low is at threat. and then you're probably going to make a new swing low going down into that 24K level. Watch for a potential bounce from that zone. Now, bulls have a new invalidation. Instead of waiting for clearance above this line over here, I think that this candle from yesterday has shown us enough that if you get above that level now, it gives you a safer entry into a long. So get above this candle, close above this candle at about 26,888, and you now have an opportunity to start to look for new momentum longs because you're probably going to be breaking that trend and sweeping above that liquidity, which is where all these shorts are, right? Here's the short stops. Here's the short stops, very, very easy. This is the main range that we've been focused on for Bitcoin for the good part of a year. Range lows all the way down at 17.9, mid-range coming in at 25.3, and then you have your range highs at about 32. We're still waiting for potential sweep and deviation above that range. Maybe in the final quarter over here, you could see something like that. Get above here, consolidate a bit, sweep those range highs, maybe come back in for one more opportunity to build longs later on in the year, or early next year, and then hopefully the bull market does actually begin. So that's something that we're watching over there. Let's give you the pivot levels for both BTC and ETH. We got a high volume range over here. You can see prices still defending and holding above that 25.9. So lining up with what I just showed you on the previous chart with the 50 EMA, if price starts to get below that, you're losing, remember, the previous daily low. And you're also going to be losing probably this high volume node, which means most likely you're going to sweep down into this low towards that 24K level. So watch that level. Alternatively, once price breaks above this, you can now see you breaking that downsloping trend line. And then I'm going to be targeting up towards $29,000, which is this range quarterly level for Bitcoin. So price is currently trying to make a move over here. Super choppy price action, super difficult to trade. If you're a swing trader, you're probably best just waiting on the sidelines for the momentum to really shift towards the upside. It's super all over the place. You have the EMAs everywhere chopping you in and out. So I'm not really going to comment on this chart over here. Just wait it out. If you're a low time frame trader, though, there is an opportunity to trade the range. But the only way that I would be looking to enter a trade is here. Okay, your levels are very clear. We've been in this zone for such a long period of time. Mark out your range lows from this wick that took place on the 17th of August, and that is 25,234. Now, the only way that we go long is this. If price comes into this level, sweeps, gets back inside, we go long. If price comes to the top side, mark off 27,671. If it breaks above, sweeps back inside and holds there, we go short. Over here, we do nothing. We're not taking any trades, nothing. Like this was a long opportunity. This was your short opportunity. Here's a couple of long opportunities. I guess you could have front run these. You could have front run that. This, not much. It's a bit of a nothing burger. Not much that you can do over there. Okay, so you're trading the extremities, the top and the bottom, and you're taking the majority of your profits towards the middle level over there. We've shown over here again what you expect. You want to watch this level. Watch the cumulative volume delta on the spot traders. You want to see liquidity come back into the market, marked by spot buying. If you see spot buying, swing traders can position to start going long. And my anticipation would be that spot buying will come in as soon as you start to break this downsloping trend line. How long have we been in this downsloping region for? Well, it's spent now. We are currently 78 days, guys, of just pretty much down only. So almost 3 months, closing on 3 months now. Pretty boring price action, pretty dull. I want to remind you of that fractal, looking back to what happened in December of 2022, leading into January of this year. Very, very similar. Go mark it off. Mark off the volume. The volume levels like this as well. Go and look what happened with the volume. It's incredibly similar. So that's why there's, based on the liquidity chart over here, it's lining up with what I've shown you on the hourly. Smart traders do not want to trade in between here. Let's have a look at it again. Smart traders are not taking any trades in this region. Only retail trading in this region, and that's why they're getting absolutely annihilated at smash in between. What did I show you over here? Your only trades are coming at the extremities, and that is exactly what the smart traders are doing, and it's shown on the liquidity charts, right? 27K liquidity, bottom side 25.8 liquidity. So lining up with my chart, 27.6, and I have on the bottom side 25. Those are your liquidity zones. You can see, look at this. flat order book. Just not much that's currently going on over here. Your shorts liquidations are currently 455. Longs are 531. It's a chop zone. You don't want to touch it. Look at the order book. Look at the orders coming in right now on the right-hand side. Minimal, absolutely nothing. No one is driving this market. There's nothing going on. It's completely empty. You can zoom in. Look at these levels. These are small orders. 1.8 Bitcoin buy. Look at that. 3.8. I mean, what is this? 32, 46 sell. It's nothing. Absolutely minuscule when you consider the magnitude and size of this market when things are running, which means you probably need to be even more careful on altcoins. You want to reduce your position size because you can easily get blown out. It takes one big player to come and take a trade, either long or short, and based on the low liquidity, the whole market is going to move, or that altcoin market. Okay, guys, if you do want to take any trades on Bybit, they are offering you $100 for free. Here it is. You deposit $100, you get $100 cash. It's limited. There's only 100 people that can take this offer using my link. I don't know how many of you have already taken it, so be quick. Ultimately, it runs until the end of the month. You have 2 more days left to capitalize on this. It's in the description below. Go through to Bybit, click on that particular link. Again, my link only gives 100 people this opportunity. It's the quickest way to make $100 in this market, the most risk-free way as well, is deposit $100, get your $100 for free. Okay, we're going on to the altcoin requests in just 1 second. I just want to show you 𝗬𝗏𝗃. I'm still expecting something like this. Very, very strong underside resistance, which is currently formed over here. We'll quickly change that up, make it pink. There you go. That is going to be your major resistance zone, expecting price to push in towards this 0.062. And ultimately, I think it's an inevitability that we're going to come back into the bottom of this range, 0.0557, which means I would rather be a buyer of Bitcoin right now than I would of altcoins, right? Because generally speaking, ETH is going to lead the overall altcoin market, which means if ETH is bleeding against Bitcoin, so are 99% of the other altcoins. Now, of course, there's going to be altcoins that are outperforming, which I'm hoping you guys can help me to identify based on your requests. So yeah, let's bring those requests up. Let's quickly get those going, and then I'll pull some of those charts. James, you have your little thing over there for me. There we go. Solana. Okay, let's go to Solana. Always one of the crowd favorites. Always one of the crowd favorites is Solana. Okay, let's have a look. I haven't looked at altcoins for quite some time, so today will be my first time checking this out in a while. Zooming in, I'm looking at the daily time frame, guys, just to keep it really broad for the majority of people and to make it evergreen. We don't want to look at 5-minute charts because it's going to be expired by the time most people watch this video in 2 hours. Okay, look, strong downtrend continues to hold. Ultimately, this is the level to get above for Solana. You need to get above those daily candles, which means you need to start to see closing prices above $20. You can see there is a little bit of buying demand that's kicking in over here, but I have to go in line with the trend as well as the range. Looking at it as both a trend and a range, well, there's your range high, here's your range low, and you have a trend within that range, which means probable rejection and sweep into that lower level. $16 remains my target at the very, very least, looking for something like that. Possibly even a sweep below. Who knows how it gets there, but possibly a sweep below. You might fill 50% of this wick over here, which could bring it down to 1360. Watch for the reaction off of that and then break back into the range. And that's, again, a long opportunity to mid-range and then potentially to range high. Break and hold under that level, and then ultimately you're opening up this as the new trading range, which means that price could come down to 750. Okay, let's look at the next one, which is Render. Here's Render. I haven't looked at Render for super long. Okay, Render's also range bound. We shorted the heck out of this one. You could see the distributive pattern taking place. We started to short on the break back into the range. I think we had our initial stop over there at about 245, and we compounded on that short when you broke this trend line. It's now come down into the support level at $1.24. It looks like you might revisit that level one more time. It's a no trade zone for me at the moment, but I would be looking for this zone to hold if you see Render coming back towards this 120 520 level, and it can prove that it's holding that. Look for some demand to kick in, and then again, potentially you could long to mid-range, which is currently where it's finding resistance, and if it gets above that, long back to the range high. Same thing is true with what I said with Solana. If it holds and consolidates underneath this level, well, then you need to short back down to the bottom of the range. Okay, let's go to Cardano is the next coin being asked about. Here's Cardano. Okay, again, consolidating at the range lows. Look, I'd really wait for a bit more demand to come in. You could probably go into a low time frame here to make it a bit easier for yourself to look for an entry. So you can see it's still in a downtrend, right? It is trying to move sideways and consolidate over here. Lining it up with the low time frame, I'd look for a bit of a trigger. Let's just see over here. Okay, do we have anything? I mean, it's not a great look. It's not a great look. I would just wait to get a little bit of momentum above this 25 cents level. If it can break this trend line towards the downside, it will give you a better entry or trigger point, because then you could start to look to get above those highs over there. Let's change the color over there. We'll make it yellow. Then you'd be looking to get back above these highs. So on a quick trade entry, I guess you could argue still break of structure coming down. It is holding this level. You can see these highs. I'll zoom in. This is a break of structure from the downtrend. You got a higher high, you have a higher low as long as this holds, but it's more consolidating. It's more consolidating. So that's all I have to comment on ADA. I'm sorry, I know maybe not the most helpful. Let's look at DOT. Okay, move back onto the daily time frame. Okay, DOT is consolidating at new swing lows. I personally wouldn't touch it. It is potential that it could still sweep all the way back down into the bottom of this diagonal in the event that altcoins go down, in the event that the ETH BTC chart goes to those outline targets. Then it's not out of the question to think that DOT, with super low liquidity, could potentially do another 24% to the downside. The alternative to go long would be very, very simple for me. I'd be looking for a deviation back up and into this range, hold that level, and I might take a long up towards this trend line, break above this trend line and hold above that 520, and then things start to change drastically for DOT. Okay, EGLD, I don't think I even have that, but I'm going to bring it up. EGLD, let's go to this one on Binance. I hope that one's fine for you guys. Okay, daily chart. Okay, I know you were spamming the comments for this one because you probably love this coin and are a bit of a bag holder, but I have to be honest with you, it's not looking too hot. I mean, this thing is in an incredibly strong downtrend. Look at that, oh my gosh. Major blow off top over here. It's been in this consolidation range for super long. What is that timing wise? You're looking at already 473 days. So over a year. Something like this is probably going to form a rounded bottom. It's going to take a very, very long period of time. That's my commentary on this. You can see, let's just quickly grab that again. You can see, why is this not working? There we go. You can see a long-term downtrend, and you can expect it's probably going to go into a further depression phase, and then maybe it's going to start to round like that. I'd wait for this rounded part. Whenever that may come, whenever you start to see it rounding up like that, that would be a safer entry into something like this. Guys, look, it's simple. You just mark off each high, right? Lower, lower high, each low, right? Low, lower low, lower low. What is that? That is a downtrend. The downtrend continues. Expect that downtrend will probably continue until such time as it breaks structure. You'll get some big pump. Watch for the higher low. And now you can start to look to establish a long-term position. So, let's see if we'll take any more. Give me 1 second. Smash the like button, hit the bell notification, subscribe to the channel. I do want to remind you of Bybit and Bitget as well, the trading competition. Join the Whale Trades team over there. Do we have any more, James? Do we have any more? It looks like not. So I'll see you guys all on the next one. Have a stellar day and cheers for now.